If you're looking to stretch your income further this year, knowing what the IRS does in tax can give you a real edge. Whether you're getting ready to file or just planning ahead, these tax-free items could help you keep more money in your pocket and possibly boost your refund next year. Here are 10 items you won't have to pay taxes on this year. Child support payments are not considered taxable income by the IRS, so if you receive them as part of a divorce agreement, you won't owe federal or state taxes on that money. Alimony is treated differently depending on when your divorce was finalized. If it was after January 1, 2019, alimony is not taxable for the person receiving it. But if the divorce was finalized before 2019, that income may still be taxable, so it's worth reviewing the terms of your settlement. Cashback, miles, and rewards earned through credit card purchases are not taxable. These benefits are viewed as discounts rather than income. Even if you rack up hundreds in cashback or travel rewards, you don't need to report them to the IRS. Most inheritances are not subject to federal income tax. However, some states have their own inheritance tax rules. If you live outside of these states, you won't need to include inheritance in your federal return. Life insurance death benefits are generally not taxed. If you receive a lump sum due to a loved one's passing, that amount is yours to keep. However, if the insurance company pays you interest on that benefit, the interest portion is taxable and must be reported. If you win a medal or receive prize money from the U.S. Olympic Committee, that income is exempt from taxes. This applies to Olympic and Paralympic athletes, making it a rare financial break for elite competitors. You may qualify for a tax credit if you adopted a child and incurred expenses such as legal fees, travel, or medical costs. While technically a credit and not excluded income, it can significantly lower your tax bill. This credit is non-refundable, meaning it can reduce what you owe to zero, but won't result in a refund beyond that. Employer-provided health coverage is generally not taxable, including vision, dental, and long-term care insurance. Money you contribute to an FSA or HSA is also tax-free as long as it's used for qualified medical expenses. Rebates you receive after making a purchase aren't considered income. They're treated as a price adjustment. Whether it's a rebate check or a prepaid card, you don't need to report it on your tax return. Scholarship money used for qualifying education expenses like tuition fees and required books is not taxed. However, if a portion of the scholarship is used for non-qualifying expenses like room and board, that part may be taxable. You can give or receive up to $18,000 in gifts per person in 2024 without triggering a tax obligation. The IRS only steps in when a gift exceeds that annual limit, and even then, it's the giver, not the recipient, who is responsible for any taxes. From child support and credit card rewards to scholarships and healthcare benefits, many forms of income are off limits to the IRS. Understanding what doesn't count as taxable income can help you make better financial decisions and potentially save more at tax time. As always, double-check the details with a tax professional to make sure you're getting the full benefit.